Welcome to 𝐄𝐓𝐇𝐄𝐑𝐄𝐍. We talk about investing, finance, and professional development. As recording time of 12:10 p.m. on Eastern Time on June 14th on Tuesday, the overall market is normalizing from the sell-off that we've incurred yesterday. But with respect to the bullish pressure that we're seeing right now, what is really driving this, right? And collectively, among the media affectation front, we know the PPI report was negative. The CPI report came out, driving a foreshadow, a negative one, during this weekend is another negative one. And also with respect to the oil fluctuations, is surging up about to be $123 per barrel. Again, while at the same time, the 10-year yields has reached to about 3.4% early this morning. So the normalization that we're seeing right now is more of a technical exercise with respect to as you reach to a certain submerged level, which we are still in, trading around 23 out of 70 on RSI scale. At the same time, we're forming a depth cross recently as a relatively, forming a valley, try to find a plateau as we recuperate the momentum upward. Is driving some natural buying pressure across the spectrum, and also just a normalization which drive that reverse correlation effects from the as the interest rates for the 10 years yields reached to 3.4%, but now normalized back down to about 3.12% at the moment, driving some buying pressure. So it's more of a technical momentum trade rather than an actual bullish reversal trade, if you may. So right now, would it be wise to start buying at the moment before it happens tomorrow, which is the confirmatory signal that we'll hear from Jerome Powell at around 2:15, 2:30 p.m. on Eastern Time? My answer would be, if you believe in this long term, I think this is absolutely no brainer in terms of incurring risk at the moment. But if you want to do more of a swing trade, like a short term perspective, it's definitely a risky one. And I've heard people yesterday on my Patreon asking me, like, is this smart to short the market? I would say, well, we have to understand that the market has already been oversold for quite some time. And at the same time, what will really drive more negativity for the market going forward would be some additional surprise elements, right? So as of today, we got, some news or some, I guess, just more of a analysis coming from economists depicting that the likelihood for us to be increasing the interest rate to even the 75 basis point or even a higher level based on all the evidence that we've collected so far will be likely. So in addition to the sell-off that we've incurred, the additional element is also with respect to corporate outlook as well, right? We've seen a lot of layoffs and corporate reduction on the human capital front, most especially, and also on the capital expenditure front as well, driving more pessimism, and at the same time lack of confidence that we are able to revive back to the normal days 2 years ago, right? So let's just dive into technical to see what's going on right now, to see how sustainable is this, momentum that we're seeing in front of us. So with respect to recording time of 12:13 p.m. on Eastern Time, we are at 1236, up about 2.4% at the moment, gliding away from the consolidated level of 1250. But with respect to the current level, is this sustainable, right? Right now, you can see that we are forming a curvature at the 20 out of 70, which was very logical because we're very submerged. And then you can see that if you check historically, every single time you reach around 22, 20 on an RSI scale, you bounce from there, so which was very logical. And at the same time, we're starting to form some of a landing on the MACD front, right? Which subsequently drives some buying pressure for us to try to recuperate back up. But right now, we have to see, right, because tomorrow is still a world event. If we hear some surprise elements, we're going to see more sell-off coming back down further, right? But if we don't, right, we should technically coming back up to the next level up, right, 1367 all the way to 1450 from here. So that's the level to watch out for. If we don't, we go down to 1100 all the way to 1000. If we break 1000, well, we're heading to 950 as a first kind of non-substantive consolidated level to basically the next real level of 750, which is quite a big drop from here, as you can tell. In respect to Bitcoin, we are consolidated around 22,500. The next level down will be somewhere around 2,500. The next level up will be a relatively sizable one, as you can see clearly, 26,500 respectively. Classic up about 2% so far. All the flat numbers, right? 14, 15, 13, 12 from here. But I think right now we have recruited back up from the 13 level, obviously, right? And you can see that we're back to the next level, 1450. So we have to see, right? I think right now, logically, technical perspective, is not terrible buy for a lot of coins at the moment. But ultimately, tomorrow is still a big event, so definitely be cautious. Dogecoin up about 5% so far at 5-6 cents right now if you round it up. So all the flat numbers, like 55, 50, 45 respectively. Cardano up about 7% so far at 50 cents at the moment. So anywhere from current level down to next level 45, to next level 40, 35 respectively. Solana is up about 8%. We were searching a little bit more higher than that earlier. We're up about like 12 to 11% at one point. Right now in between levels, right, the flat number. And you can see that we clearly bounced very sharply at the 2570. MACD looks quite interesting. It's still kind of fused together, which makes sense because we're kind of in between levels. So the likelihood, based on what we know so far, of going back up to a little bit around 33 is likely. But you can see that we kind of got canceled out as you try to get there momentarily. So we'll have to see how the story will play out tomorrow, obviously, as the main catalyst. XRP up about 1% so far at 30 cents at the moment. Well, all the flat numbers again, right? 30, 25 respectively. Polkadot up about 6.5% so far at 7.45. All the flat numbers with the 750 right now. Below level will be 7, 650 respectively. It looks good because we crossed down for a while now. So I think the bullish pressure coming up will be more likely than selling down for Polkadot specifically. Algorand up down about 1.5% at 30 cents at the moment. 30, 25, 20 respectively. Shiba Inu up about 2.5%. I actually, we formed a death cross recently, so it's not terrible. So I think right now, like the levels, if we were to sell back down, will be like obviously 800, 750 respectively downward from here. Polygon down about 0.5%. We are at the 40 right now. So like all the flat numbers, right? 45, 40, 35 respectively. And then lastly for AVAX up about 3%. Same thing, right? 1650, 16, 15, 1550 respectively. All the flat numbers. Okay, so that's my depiction. Again, right, do not be too like, even though it looks green because of the sell-off that we've incurred yesterday, but this, is very much like a bull trap that we know because we don't know what's going to be happening tomorrow. But I think based on the collective wisdom and the observations that we have had so far, is kind of a flip of a coin type of dynamic right now. But I think the likelihood of actually selling down further, based on what we know so far, after the FOMC meeting, we have to see, right? Because like if he is confirmed to have 75 basis point rate hike, that's gonna be an interesting one, right? So have a good rest of the day. It's my last one, so I'll see you guys tomorrow. Take care. Bye.